Good day, everyone. Alice here from Safi Financial Network. Today is November 23rd, 2022. After daily analysis absent, I just came back with a different analysis actually. Lots of people are talking about the Federal Reserve pivotal point for the interest rate, or if you have heard, the Fed is gonna pivot, and interest rate is kind of like at all-time high since 2000. So everyone is expecting another probably pausing process or slowing down, as we have heard about the meeting minutes today that Fed, like lots of Federal Reserve chairmans, they said that Federal Reserve is going to slow down the process of interest rate or the hawkish tone of the interest rate, and they call it as a dovish. I wouldn't call it as a dovish just because they are saying uh, they are going to increase the rate, but not as the same speed. So a market just took it very cautiously, took it as like a bullish sign, and today and like the rest of the week actually, we had very nice move to the upside, but the volume was very light. So in this video, I'm gonna talk about the historical point of the Federal Reserve pivotal points and what happened to the stock market after that. So make sure that watch this video carefully and completely till the end because lots of interesting things are going to be covered. Um, Going back to 1969, so this is the first time that I just want to cover since like 50 years or so. A 69 Federal Reserve pivot here, and interest rate came down all the way to here to 71 double bottom and then coming back up to September 73 Federal Reserve pivot here, and just a small pivot going up again. July 74 pivot. Here's interest rate peaked at 80s, which is pretty significant, and Federal Reserve pivot sharply. Interest rate is coming down, coming back up again sharply. Pivotal point at 81, June 81. Again, interest rate coming down sharply. So that's for 70s and 80s. And if you go to recent days, like recent, I mean, last 20 years, not recent days, peaked at December 2000. So here's interest rate went up slightly, paused in 2000, and then pivotal point at December 2000, and coming down sharply. Here is another one. Starting interest rate, a hawkish tone to the interest rate from 2004, going all the way up. 2006, they start pause. They keep it as the same level until July 2007, and pivotal point happening. So what caused Federal Reserve increase the rate? So everyone knows that inflation. So here's the chart of the inflation with a pivotal point. So as you see here, this is core inflation, this blue line, and these areas are when Federal Reserve pivots. So when Federal Reserve bring the interest rate down, it doesn't mean that inflation is coming down. That's the first signal. So this is a 70s and 80s, which is very important. We are going to cover that why. Just because inflation was up there and Federal Reserve pivot earlier, and look what happened. So inflation came down afterwards. 73 September, they just pivot, and look what happened to the inflation. Inflation skyrocketed to the upside. And if you see what happened here, so this is the interest rate. Interest rate went up all the way here. So this is September 73. Bring it down. When they bring it down, look what happened to the interest rate. Interest rate went all the way up to here, and and again they just bring the interest rate down just because they had a hawkish tone to the upside. July 74 bring the interest rate down, and here's the inflation. Inflation just went higher and higher and peaked here in 75. Even it doesn't mean that if they did a mistake here. So that's what they are saying. They don't want to do the same mistake like 70s because they bring the interest rate down sooner than expected. And look what happened to the inflation. And right now, Powell, all the Federal Reserve chairmen, they're saying we want to suppress or oppress the inflation. So that's why we need to keep the interest rate high as much as we can or as long as we can to bring the inflation down. So they don't want to do the same or repeat the same mistake they did at 70s. Because when they bring the inflation down, interest rate down or pivot earlier, what happened to the inflation? Inflation is going higher and higher. They bring it down here again. Inflation went all the way up to here. So here is the 80s. So Federal Reserve pivot, inflation went up just slightly, then coming back down sharply. Again, they pivot here because already market was in recession. And they pivot here and inflation went down all the way to here. So when we see the chart of the stock market and coming along or compare this again, these charts, you will see why they just bring the interest rate down or they just pivot. So here is 2000, they pivot, inflation went down. Here is 2007, they pivot, inflation went up first, stay there for almost 2-3 years, and then coming down and um, went like stay below 2%. And look, where are we at? So we are at 6.3% inflation. This is core CPI, and compared to the level that Federal Reserve is expecting, which is 2%, is very, very high. So there is one thing. Don't ever think Federal Reserve is going to pause or pivot when interest rate is here. Even don't think when interest rate is coming down, I'm sorry, inflation is coming down to 2%, they're gonna keep the interest rate down. They wanna make sure they don't wanna do the same mistake like here, like 70s. So they just pivot and look what happened to the inflation. So they don't want to repeat the same mistake, right? So they want to make sure interest rate is coming down to 2% to 3% at least. Then they're going to make sure that inflation is staying there for a while, and then they bring the interest rate down, right? So what happened to the stock market on those days? So here's the chart for the Dow Jones Industrial. By the way, 70s, 74, 65 to 82, especially was a choppy market, like market didn't go anywhere. And look, what was the time? Like almost 17 years, market were in consolidation phase. I know lots of people are saying this is a good rally, this is a crash, this is a rally. But if you see in almost 17 years, market didn't go anywhere. So probably we are at this stage, and we are at the beginning of this stage, I would say. And probably if we have any rally, I'm not sure, for next 6-7 years, even that would be the bigger crash is coming, just because interest rate is crazy up and inflation is very, very high compared to 2000 to 2022. Like inflation was at, I would say, 2% maximum, 3%. But where are we at? 6%, 6.3%. Here is the Dow Jones chart. Federal Reserve pivot here, and look what happened. So market didn't go up. Market just went uptick for a month or two, but went down sharply and lower low and lower low here. So for those guys who are waiting for pivotal point from the Federal Reserve, don't ever think market is going back up crazy and testing the new all-time high. So this is 69. This is 73. Federal Reserve exactly pivoted at September 73. And look what happened to the market. Market went down. right? So here is 74. 74, market went down sharply after they pivot. You know why they pivot? Just because we are in recession. We are in a severe recession, and they want to just bring the cost of the borrowing money because they want to boost up the economy, right? So because economy is dead, economy is not moving. So they want to just bring the cost of borrowing money by pivoting the interest rate or bringing down the interest rate for ordinary people, for businesses to just borrow the money with low cost to just run the business again. So when they pivot, this means economy is not doing good, and we should see another lower leg, at least one or two. So here is another one, here is another one. There are three examples. There is only one example here at 80 when they pivot, market went all the way up to here for next 1 year or two, I believe just 14 months. When market topped here, look at that. Here's the double top. Again, we were into recession. And Federal Reserve pivot in 81, market went down. It didn't go up, market went down. So all recessions are deflationary. So if you look at the chart of the inflation, except this period, inflation went down. So recessions are deflationary, not inflationary. So when we pivot, when not me, I mean like Federal Reserve pivot, so it means we are in a recession. So recessions are deflationary. So here's the chart. We are in recession, so that's why they pivot. Here is the recession. We are Federal Reserve pivot here, 81. Here is another time, dot-com bubble. So we were almost at the top of the Dow Jones. I know Nasdaq was more lower, but this is a nice one. So we were all the way up to here in December 2000. They pivot, and look what happened after that. So Dow Jones went all the way down to almost December, October. I believe it was September 2002 market bottom, like a Dow Jones bottom here. So in 2 years, market went down even after pivot. Here is actually this is July 2007. This is not December 2000. Here's July 2007 when Federal Reserve pivot. So we had like a couple months uptick, but look what happened after that. Market went all the way down to here. And this is the capitulation phase that I'm just looking for in 2023, right? So if you go to the chart of the Dow Jones today, let me just bring the chart of Dow Jones. Here's the Dow Jones monthly chart. As you see here, lots of people are calling, we are bullish for the market. Market already bottomed here, but interest rate is here. Like if you want to compare to the interest rate, so interest rate is, let me just go back to the interest rate chart. So here, we are at here. If Federal Reserve wants to pivot, then we should expect another reaction happen the same before, right? So market will coming down probably. And look where are we at in daily chart and weekly chart. Let's look at the daily chart, by the way. So this is the daily chart for the Dow Jones. So we are at a very, very nice uptick to the upside. This is a very, very sharp rally, something like this. And we are kind of like in double top here. Lots of people are saying this is a big W pattern. I'm sure this is a good W pattern, but I'm not sure even if we are getting to the higher high. I'm not sure if this is going to trigger another new all-time high for Dow Jones. Just because this area is very, very strongly resistance area for the Dow Jones. And if market wants to roll over, probably there is good fundamental reason behind that. And that would be the pivotal point, or Federal Reserve is going to pivot for the interest rate. and which is happening in 2023. So I believe the next capitulation phase for all the markets, for all the indexes, is happening in 2023, which the same as history happened before. Here is pivotal points for, let's go to the chart of the Dow Jones here, right? So this is a nice example, right? So we were up there, but after pivot in December 2000, Dow Jones went all the way down. Here's the pivot, Dow Jones all the way down. So for those ones who are looking for pivot from Federal Reserve, don't even dare to ask for pivot, because look at the chart. When they pivot, market went down all the way down. Not because they just pivot, because they had to. We were already into recession and they didn't have any other choices, just pivot. So for those folks who are waiting for the pivotal point from the Federal Reserve in interest rate, that's going to be scary for the market. And probably next capitulation phase for the Dow Jones or the other indexes is coming in 2023. Probably we are going to the lower low, probably to this area, or even some people are saying this area. I'm not sure, but I'm just looking for another 25,000 for the Dow Jones in the capitulation phase. And that would be just 10,000 from now, almost 9,000, 10,000 from now, right? So in 2023, and I would guess probably in first half of 2023, Federal Reserve is going to signal, at least giving a market signal, that we are in recession, we are in severe recession, and we are going to pivot, and that's gonna trigger the sharp sell-off to the market. Okay, so this is kind of like a macro and macroeconomy analysis, which I rarely do in this channel, but I think based on the environment and based on the seasonality and based on the terminology everyone is using these days, I'm sure this would be useful for you folks. If you like this video, please smash the like button, subscribe to our channel, and I will just post another video for weekly analysis by end of this week. Have a good Thanksgiving, everyone. See you on the chart. Bye bye.